Alan here. Let's talk about Shopify. You're a Shopify business owner who wants to make sure that you're tax compliant with your bookkeeping and accounting. Given the huge amount of things that you're responsible for, it'd be a lot easier for you to do this if you have a checklist. I have put together a checklist for you to review and use so that your Shopify business is not only massively successful, but also completely governmentally tax compliant. Are you ready to review the checklist? Let's do it. Number 1, open business account for revenue and taxes only. Your business is a separate entity from you, so treat it like a separate entity. Don't commingle your personal and business expenses together. Open an account to deposit your earned income and a second bank account to hold your tax payments. Plus, when you do this, it is easier to reconcile your bookkeeping and accounting records, bank statements, invoices, and receipts if your bank accounts only contain your business revenue, deposits, and business-related withdrawals. How nice would that be? Nice and clean. Number 2, get a business credit card. To start building your business credit and maintain it, get a business credit card that you only use for your business expenses. When strictly used for your business expenses, you can easily reconcile your credit card statements with your bookkeeping, accounting, and bank records. 3, set up a reliable bookkeeping system. The purpose of bookkeeping is to record and organize your business financial statements. That means recording your income, paid expenses, unearned income, tax payments, appreciation costs, asset book value, and etc. These expenses must be organized so that information can be correctly entered into your accounting records and used to check your accounting information and prepare your taxes. Note, having an experienced qualified bookkeeper who can organize your books and coding and make the notes needed for the accountant who will be organizing your financial record and analyzing them could be a very great asset and something for you to consider as you get busier and busier with your business. In addition, your tax preparer should be able to use your bookkeeping record to check accurate information before your tax returns are submitted to IRS for review and approval. This ensured that you will get the maximized tax savings for your business when your books are in order. Number 4, set up a reliable accounting system. An accounting system collects, analyzes, and summarizes your financial transactions. With a good accounting system, your financial transaction will be entered into your accounting system in real time. This means that anytime you can generate a balance sheet, income statement, cash flow statement, and financial reports with financial analysts of the data. The types of financial analysts that you may be interested in looking over include financial ratios and financial trends. Number 5, establish payment channels. As an e-commerce business, you should be prepared to accept payments from different types of channels, even internationally. It is in your best interest to establish payment channels or use third-party payment processors who can accept credit cards, debit cards, PayPal, Stripe, bank transfers, cryptocurrency payments, Apple Pay, and Google Pay. Another consideration that you should make is your payment apps, integration apps, and third-party payment processors can directly feed information into your accounting and bookkeeping system. By doing this, it will be a lot easier to keep track of your customers' orders, satisfaction, chargeback, and buying trends. Number 6, collect and pay your sales tax. You are required to pay sales tax on your e-commerce businesses, goods and services, mainly because of the South Dakota versus Wayfair decision that held that businesses are no longer required to only care about physical nexus, meaning that you're actually physically located in that state. But now it is all about economic nexus, which means as long as you are economically making sales to customers in that state, you might have an obligation to collect and remit sales tax to that state. You'll likely be required to pay taxes in states where you either have a physical or economic nexus, where you store your inventory and have staff or affiliates in that state. Depending on your state, many of them may also require you to pay sales tax on goods and services if your business is in an origin-based state that requires you to pay taxes when business just ships or provides goods and services from its location, or a destination-based state which require your business to pay sales tax on goods and services provided to people and or businesses located in that state. Sales tax on shipping is another interesting topic we should touch on. Some states will charge a sales tax on the goods that you ship. You need to check the local requirements to know that you're required to pay sales tax on your shipping. When you do research, you'll find that some states charge no sales tax on shipping, like Alabama, Delaware, New Hampshire, and Oregon, and that sales tax is based on the total value of the sale, and the sales tax is charged separately for shipping in states like Illinois, California, and Minnesota. Another great thing that we need to touch on is Shopify taxes. As a Shopify business owners, you're required to pay sales tax, income tax based on the tax laws of the state where you do business. If you're doing business internationally, however, check with each country on its value-added tax, otherwise known as VAT. The value-added tax is primarily charged in European countries. The goods and service charge, also called GST, is charged in places like Canada, Vietnam, Singapore, Australia, Spain, Brazil, and Italy. Another common question we get, are GST and VAT the same? They are very similar. Both are indirect taxes added to the cost of the sales collected by the business then remitted to a tax collection agency. VAT and GST rates vary based on the country, product, and services. Note that VAT is applied to most goods and services than GST. VAT is primarily used by European countries and is collected at each stage of production and distribution of the goods produced by a business, while GST is used by countries around the world and collected at the point of sale. Most countries use a unified GST. That means the GST includes the country's central tax and state level. Central tax include taxes like the sales tax, excess duty tax, and service tax, and state level taxes include entertainment taxes, entry taxes, transfer taxes, and luxury taxes. Shopify sales tax collection. Shopify doesn't automatically collect sales tax for you. For this to happen, you must have changed the setting on your Shopify account so that each of your transactions that is eligible for sales tax automatically has sales tax added to it at checkout. If you use Shopify Tax, then Shopify will collect sales tax for your business as long as you have correctly registered with the relevant states in the US. Calculating sales tax on the Shopify platform can be done using its opt-in program. The Shopify platform will tax your product based on its product description, recommend a product category that you can accept when modified, assign the correct tax based on your product's category and the jurisdiction's tax regulation, allow merchants to review the sales tax charge on the product, make sure that the sales tax added to the product price is correct. This should be regularly done because ultimately merchants are liable for correctly paying the sales tax and held liable for failure to properly pay the correct sales tax amount to the cost of their product, as well as, of course, remitting the sales tax payment to the taxing jurisdiction. Now, this is very important. Warning! Shopify does not file your sales tax return for you. You can have them done and filed by using a professional tax accountant with someone who specializes in e-commerce accounting. Verify your sales tax information with e-commerce or bookkeeper to make sure you are tax compliant, as it can be a very complicated subject. Failure to pay required sales tax may result in a tax audit, fines, and backdated charges. Note, sales tax may not be charged if the product is exempt from taxation or the customer has a tax exempt status. If this is the case, you can exclude those products from your sales tax collection by changing Shopify settings for them. Shopify provides you with tax finance report and sales finance report. They summarize your financial data to help you with filing your taxes and tax reporting. Licenses and permits. You must carefully research whether the state and country you do business with require you to have a business license and sales tax permit in order to charge and collect sales tax. If state laws require you to have a sales tax permit and or business license before you charge sales tax on them, you must apply for those licenses before you can do business in that state. Number 7, adopt a reliable inventory system. Monitoring your inventory is essential if you want to run a successful e-commerce business. You will need to know what is selling, what's not selling, what's in inventory, what's being shipped, how your return merchandise has been classified, and what was done with the merchandise that was returned to your company. For example, when the merchandise was returned, was it classified as carrier damage, customer damage, defective, or damage? Number 8, hire qualified professionals to manage your bookkeeping, accounting, and tax preparation. By hiring professionals to do your bookkeeping, accounting, and tax preparation, you can save time getting the work done, make sure it's done right, and have someone who can explain the work for you if you're audited by the IRS. Moreover, you'll have a professional who can answer your questions and explain things to you. Number 9, look out for tax-deductible expenses. Are you recording all your tax-deductible expenses? Are you keeping records of all your expenses? Do you have at least 2 copies of each record, original and a copy of the original? This is a really important step because your business expenses can decrease your taxable income tremendously. It can take you from a higher bracket to a lower bracket of taxation, and it can be used to help you qualify for tax credits, provide information that's needed to create your financial statements, and do financial analysis on your business operations. If you're unsure what qualifies as a taxable business expense, review the following lists: vehicle costs, marketing and advertising fees, contract labor costs, Shopify platform fees, website maintenance fees, payment processing fees, office supply fees, internet fees, phone fees, computer software app and fees, business meals, business travel expense,
additional occupancy fee, resort fee, share fee.
Now that's a crazy list, right? To max out your tax-deductible expenses, have a professional tax accountant or tax preparer go through your business records and itemize and code all your business expenses correctly. This will save you so much time in the back end when you're trying to figure out how much tax savings you actually have maintained this year. Number 10, maintain your receipts and invoices. You should keep copies of all your receipts and invoices for at least 7 years, if not indefinitely. The receipts and invoices are required to document and serve as evidence that the claimed business expenses are legitimate and real. The kind of financial records you should be keeping include receipts, cash receipt tape, deposit information, invoices, credit card receipts, canceled checks, documentation of electronic fund transfers to your business, bank statements, petty cash slips, account payable and receivable documents, tax filings, previous tax filings, and W-2 and 1099 forms. All your receipts, invoices, and other documentation should have the following: a date, amount of payment, description of purchases for transactions, before business meals, also list who your business meal is with and the business topic discussed during the meal. Finally, don't just throw all your paperwork into a shoebox or bag. Separate your expenses by category to make it easier to check them, organize them, and list them into your business records. This process can be made easier by taking photos or scanning each document and using accounting software to store the information, put them into the correct account, and itemize your expenses at the end of the year. Number 11, set aside money for taxes. The USA has a pay-as-you-go system. That means as you're expected to pay your federal taxes as you earn income. As a business that earns revenue from providing goods and services, you must set aside taxes due on your earned income on a quarterly basis. That's the best rule of thumb. Another good rule to follow is to set aside 30% of your business income from each sale. If your business has a high volume transaction, take 30% of your monthly income and put it aside for taxes. An alternative, you can look at your annual income from the previous year, calculate 30% of it, divide that value by 12, and set that money amount aside each month of the year. You should separate your tax payment from your revenue. If you do this, open a bank account that you use strictly for your tax payments. Never touch the money that you put into your account for tax payments, except to withdraw it and pay your taxes. You'll sleep so much better at night knowing that you just did this step. Making your federal tax payments. If you are a business that will have a federal tax payment that exceeds $1,000 and your business is not incorporated, you should be making quarterly tax payment. And when I say incorporated, that means you are a C Corp status right now. Otherwise, if you're an LLC or S Corp, these steps should still be followed. Quarterly tax payments should cover at least 90% of your federal taxes due for each financial quarter. If your quarterly tax payments do not cover at least 90% of your federal taxes due at the end of each quarter, you may be fined and charged interest on the unpaid tax for that quarter. How can you avoid problems with your quarterly tax payments? If your business is a startup or only infrequently earn income, is likely to have federal taxes due to less than $1,000, then don't worry about quarterly tax payments. Calculate your quarterly tax payments based on your prior year taxes and divide them into 4 parts. Pay 1/4 of your prior year taxes each quarter of the current fiscal year. If you do this, even your quarterly payments are less than 90% of your federal taxes due, the IRS is less likely to fine you and charge you interest on unpaid taxes for the quarter in which your quarterly payments were less than 90% of taxes owed to the IRS in the previous year. If you're an employee who receives W-2 and your employer pays your medical and social security tax, then you can have your employer increase withholdings from your paycheck and or reduce the exemption on your W-4 so that your Shopify business taxes will be paid by your employer for you. Note, the additional money paid comes from your paycheck. Your employer is deducting the money from your paycheck and sending it to IRS. This way, it can help pay for some of your business taxes on the side. Quarterly tax payments are due on April 15, June 15, September 15, and January 15. Remember that date. If your business is small and infrequently earns income and that's less than $1,000, don't worry about all of this. Like I mentioned, just pay at the end of the year. Tip number 12, don't forget about negotiating with your suppliers. Although you may think that you don't have a lot of control in your business sometimes because you have to rely on your suppliers to give you the right pricing for everything, that is not always true. Once you have grown to a certain size where you're a 6-figure or 7-figure business, you have much more control than you think to negotiate with your suppliers, because the supplier knows that you are now a big business that can get them a lot of sales and a lot of money each month. That is the right time when your business has grown that much to leverage your sales and revenue numbers to go after the supplier and say, hey, I need to get a lower per unit price, or I'm gonna start shopping foul at other vendors and you may lose my business like that. A lot of times they will look at the situation, look at how much money you have been making and how much orders you have been ordering from them and say, yeah, that is true. You have been a great customer for us, always paying us on time. We'll give you a great discount on the next product order that you make from us. That is key. Lowering your supply costs is going to give you 3 to 7% more profit on your bottom line when you're able to do this. That is pure profit just from making a quick email, quick call to your supplier and letting them know that in order to win your business from now on, they have to play fair and give you the best rate possible to keep earning your business. Otherwise, you're just gonna walk out the door. Bye.
Bye.
Tip number 14, managing returns and chargebacks. Your accounting and booking system must properly record the return of goods and chargeback. When goods are returned to your business, they must be properly classified by you or the third-party platform you partner with, like Amazon. The classification of the returned goods affect how they are treated in your business books. For example, returns may be classified as customer damage, carrier damage, defective, or damage. If the customers damage the goods, your business may refuse to accept the returned goods and refuse to return the customer's money. If the goods were damaged by the carrier, you may refund the customer's money, replace the goods as been returned, and have the carrier reimburse you for the cost of the goods damaged by their employees. Furthermore, if the goods are defective, you may have to refund your customer's money and write off the goods as a loss. Many different scenarios to consider, but that's the reason why we have to do proper bookkeeping. Tip number 14. Checklist for choosing the correct accounting system. You're strongly advised to use accounting software to collect your financial transaction fees, statements, and do a variety of other accounting related tasks. Before purchasing and setting up your accounting software, ask yourself the following question. Does it have Shopify integration and a range of apps? Does it have a free plan with subscription budget? Does it allow you to create financial reports for your business? Can you calculate all your required payroll documents? Does the software app offer extensive training and support in different forms, customer service support, and FAQ section, and email support? Can it process different currencies? Can it manage domestic and international sales tax compliance? Can it manage multiple bank accounts? Does it have cash flow management features? Does it have inventory management and cost of goods and service features? Can it manage receipts, invoice, revenue, expenses? Can it manage invoices, accounts payable, accounts receivable? Can it track and separate financial transactions into different accounts, departments, and businesses? Can it process different kinds of payments? Can it do all the things you need and want to do for your business at a fair price? If your accounting software does not have some of the features you need or want, are there other plugins or third-party things that can be used with the accounting progress to provide you all the things that you need and want? When looking at accounting software packages, consider these: Xero, HubDoc, TaxJar, A2X, QuickBooks Online, FreshBooks, Wave, and Gusto. A combination of these software are the most commonly used by clients in our agency. Number 16, set up fraud prevention systems. It's important that you have fraud prevention measures in place to prevent businesses and problems with your business. Your fraud prevention measures should allow you to keep a close eyes on your bank accounts, statements, payroll, inventory, expenses, and revenue. Some things you can do to prevent frauds in your business are: create weekly, monthly, quarterly reports, regularly reconcile your bank statements, have two-factor or two-signature deposit withdrawals and account transfers. Those are really important things to keep in mind to make sure that you are keeping good security on your account. Number 17, KPIs to measure performance of Shopify business. When assessing the financial success and performance of your business, you need to look at the key performance indicator called KPIs. Some KPI they may want you to look for or your business are: cost per acquisition. That's the cost of acquiring new customers. These costs include fees for advertising, email campaigns, and discounts. Customer lifetime value. The average revenue earned from your customer before they discontinue using your business services. Average order value. The average value of an order made by a customer. Gross profit margin. The actual profit earned after cost of goods and services are deducted from your earned income. Inventory turnover. How often do you sell through your in-stock inventory within a year? It's calculated by taking total sales, subtracting the cost of goods and services, and dividing the remaining sum by your remaining inventory. Alright, that was a long list of things you should be doing. Let's recap. Your Shopify Owner Checklist should include automation of your bookkeeping accounting system, hiring professional bookkeepers, accountants, and tax preparers, calculating, collecting, and remitting your sales tax payments, maintaining your financial records on a regular basis, regularly producing and reviewing your financial documents, having separate bank accounts and credit cards for your personal and business expenses, setting up fraud prevention systems, and setting up KPIs using them. For more information about financial statements, accounting software, and tax-deductible business expenses, subscribe to my channel and hit that thumbs up button. We'd love to hear from you. So if you have any comments or questions, please leave them below. We promise to answer every single one. Thanks a lot. Alan out.